Jim Lacamp, one of the things that I find most disturbing in the last, 10 or so trading sessions is that besides the financials in the banks, what's been selling off are industrial-related stocks, basic material-related stocks, what I would call cyclical growers. We saw it again today. Transport's down 4% today. Morgan Stanley Commodity Index down 2%. Morgan Stanley Cyclical Index down 4%. Machinery and construction, Jimmy, down 4%. This has been a pattern, and I'll tell you what else bothers me. In the shorter run, we are seeing the speculative junk bond yield spreads and rates are starting to widen, Jim Lacamp. They had been narrowing, and even the investment-grade corporate bond rates and spreads are beginning to widen. Now, what's going on here? This all looks to me like a vote against economic recovery.
Absolutely, and if you look at all the spreads in the market, the ones that the government are not directly involved with, in other words, the private sector spreads, those are all too high. Jumbo mortgage rates are still too high. The notion that we're going to do something with mortgages and there's going to be this massive demand for refis and it's going to heal the housing market when we already have way too much inventory on the market in the first place, people are being laid off at accelerating rates, delinquencies are accelerating, foreclosures are accelerating, and today's housing numbers were the worst in 12 years. We have a long way to go. In the meantime, the toxic assets are getting more toxic every day because policy has not been credible.
So what are you doing about
it?
What are you doing about it? You were talking to me, I think, about corporate bonds a while back. Now, they've had a setback. Are you still going there?
Yeah, short-term, high-grade corporate bonds is mostly where we've played, a few convertible bonds. The muni bond market is really in disarray right now because there's municipalities around the country that are really struggling. But because that market's in disarray and inefficient, there's some opportunities in that market. And we also like gold. I don't think inflation is here yet. I think we have to get through deflation first. Then we'll see a massive rally in gold.
I want to hear, Art Laffer, in view of your worries, what is your investment strategy right now?
Well, I think, Larry, you have to be very careful and very safe with your assets. I mean, this is a time when I think taking a wild position is the wrong thing to do. I like liquidity. I like keeping very secure assets. I think Jim is correct about gold. I think that's a very good place to be. And just bottom line, I think you go to cash as much as you can.
Peter Schiff, are you still shorting the dollar because the dollar keeps getting stronger and stronger as you are shorting it?
The dollar is up again. It's not really making new highs from where it was a few months ago.
The DXI is up over a percentage point today, Peter. Come on. The DXI, the dollar index is up a percent.
The dollar index is not making a new high. But look,
how do you know that? Wait a second. How do you know that, Peter? It's up 8% for the year to date. The dollar is up about 25% from its lows.
That's because it's worse than we are.
But how do you know the dollar is going down, Peter? I want to challenge you on this.
Like, how do you know anything? Look, I know that when we're creating all this money and we're not creating a lot of goods, I know the dollar is going to plunge. Eventually, it has to happen.
But Europe is creating the money too. Other currencies are doing the same thing.
Or mathematics. I'm certain it's going to happen. I don't know exactly when, but I know the dollar is going to plunge.
It's only pretty by comparison. Europe is in far worse shape than we are, and their banking system is in far worse shape. Oh, yes, it is.
Yeah, because they loaned us so much money. It's because of bad loans to America.
Steve Forbes, do you think
the size of your Eastern European loans dwarfs the size of the U.S. subprime market?
Steve Forbes, do you think the Fed should be buying more bonds and pushing in more money? Peter Schiff and Art Laffer are saying the Fed has pushed in too much money. Who's right here, Steve?
Oh, I think you just look at the Fed balance sheet. It is shrinking, and they should be targeting this to the area that needs it, which would get this economy moving. Mortgage-backed securities, and also, Larry, let's do that mark-to-market, get rid of that, and restore the uptick
Steve,
rule.
you buy those mortgage-backed securities with your money. Don't buy it with my money.
Peter Schiff, is there any condition at all under which you would buy U.S. stocks right now?
Well, there's some, sure. There's some good U.S. stocks.
Give me a for instance.
I still think that there are cheaper stocks outside the U.S. on a PE basis or a dividend yield basis, but there are some good companies. And, of course, you know, when inflation really kicks into high gear, ultimately a lot of U.S. companies are going to benefit from that because they're going to see their debt wiped out. And it's going to be better to own stocks than bonds.
All right. I got to leave it there, gentlemen. Thank you very much.